Hello and welcome to the session. Taxation LO1 analyze taxation systems and the legislation that governs them. What roles do taxes play in modern economies? This video explores the UK taxation system from its core functions to international influences. Discover how taxes shape economic behavior, redistribute wealth, and stabilize the economy. Taxes fund essential public services like healthcare and education. They help redistribute income to reduce inequality. Taxes can discourage harmful behaviors, like smoking, through levies. They stabilize the economy by adjusting with economic activity. Finally, taxes address market failures by pricing in social costs. The UK tax system combines direct and indirect taxes. Direct taxes include income and corporation tax. Indirect taxes cover VAT and excise duties. HMRC administers most national taxes. The system balances fairness, efficiency, and practicality. Income tax applies to earnings and other income. National insurance contributions fund Social Security. Corporation tax is levied on company profits. VAT is charged on most goods and services. Capital gains and inheritance tax cover asset disposals and estates. Taxpayers must register for applicable taxes. Accurate records are essential for compliance. Returns must be filed on time to avoid penalties. Taxes should be paid by statutory deadlines. Cooperation with HMRC during checks is mandatory. Non-compliance includes late filings and errors. Penalties escalate with continued non-compliance. Interest and surcharges apply to overdue taxes. Serious cases may lead to criminal prosecution. Compliance is incentivized as the cheaper option. The UK is linked to global tax systems. Double taxation treaties prevent income being taxed twice. VAT rules with the EU add complexity post-Brexit. Anti-avoidance rules align with global standards. These factors shape national tax legislation. UK tax law is shaped by primary and secondary legislation. Annual finance acts adjust tax rules and rates. Case law interprets statutes, especially in VAT contexts. HMRC guidance influences compliance practices. Frequent changes keep the system responsive. Trade blocs like the EU affect national tax laws. EU rules harmonize VAT principles. APEC focuses on trade facilitation, not tax harmonization. NAFTA influences tariffs and customs, not direct tax codes. These blocs shape tax outcomes indirectly. The UK relies on a mix of income tax and VAT. EU nations focus more on VAT and Social Security. The US system is a patchwork of federal and state taxes. Singapore emphasizes competitiveness with a broad GST. The UAE is transitioning to include corporate tax. The UK uses progressive income tax for fairness. VAT's regressive nature affects lower incomes more. The US has mixed progressivity with payroll taxes. EU countries redistribute through social contributions. Singapore and UAE prioritize capital attractiveness. UK's tax system is complex but robust. US compliance is costly due to federal-state overlaps. EU VAT rules are clear but technical. Singapore promotes predictability in compliance. UAE is adapting to new corporate tax requirements. EU membership harmonizes VAT systems. The UK faces added friction post-Brexit. Ireland uses tax strategy for economic benefits. OECD provides frameworks for global tax comparisons. These dynamics influence national tax policies. The UK balances revenue with rising complexity. EU models emphasize harmonization and welfare. The US offers flexibility but fragmented compliance. Ireland's strategy attracts investment but risks concentration. Singapore and UAE focus on competitiveness. A balanced tax mix ensures revenue stability. Tax laws should be clear and predictable. Simplified compliance reduces costs. International alignment of VAT rules eases trade. Corporate tax must focus on real economic activity. Legislation should support a broad tax base. Certainty in tax law encourages compliance. Digital administration simplifies processes. Cross-border VAT should follow international guidelines. Anti-avoidance rules must be targeted and transparent. Transparency builds trust in the tax system. Publishing distributional impacts informs policy. Clear fiscal costs of exemptions are crucial. Compliance gaps should be addressed openly. These practices enhance legitimacy and compliance. Treaties prevent double taxation and encourage trade. Information exchange supports global tax fairness. Consistent cross-border income treatment is essential. Cooperation reduces economic and reputational risks. National laws must align with international standards. A resilient tax mix balances equity and efficiency. Certainty in tax law reduces disputes. Digital systems lower compliance costs. VAT should align with the destination principle. Corporate tax must withstand global minimum tax standards. Tax systems should be resilient and fair. Certainty and clarity in law are vital. Digital administration aids compliance. Cross-border VAT needs international consistency. Corporate tax should focus on substance over gimmicks. In conclusion, taxation systems play a vital role in supporting government functions and promoting economic stability. Through analyzing different taxation systems and the legislation that governs them, it is clear that taxes are structured to generate revenue, redistribute wealth, and influence economic behavior. Legislation ensures that taxation is applied fairly, consistently, and transparently, while also providing guidelines for compliance and enforcement. Understanding how taxation systems operate within their legal framework is essential for recognizing their impact on individuals, businesses, and the wider economy, and highlights the importance of effective and well-regulated tax policies. Thank you for watching this video. If you have any questions, please feel free to contact us via email or WhatsApp at 07484361688.